So, you guys, thank you so much for joining me for this month's episode of Step Into Home Ownership. Today we have Patti Farrell of Mutual of Omaha, and she's going to chat with us a bit about a dreaded topic, and she's going to help clarify some things for us. A reverse mortgage. Right. Patti, first of all, thank you so much for joining. I appreciate you
Thank
taking
you.
the moment to speak with us.
Thank you.
So Patti, let's just dive right into it. What is a reverse mortgage?
A reverse mortgage is a loan product under the FHA, Federal Housing Administration. There is a proprietary product that is also available in other states, but we're going to discuss today the FHA Home Equity Conversion Mortgage, aka reverse mortgage. It has an age limit of 62 and it has to be on a primary property. Up to 1 to 4 family, just like any FHA program, we do the same rules. You just qualify differently because it's an age-based program. Starts at age 62, like Social Security can, and then it allows you to tap into home equity in your home that you can then either eliminate a mortgage payment, pay off some debts, or just create cash flow. And it's been around since 1999, but there's still a lot of misconceptions and people are afraid of it. They just need to get the right information.
So tell me, Patti, who could benefit from this? Like, when should they reach out to you about possibly learning about or taking out a reverse mortgage?
Well, I deal with the consumer themselves, I deal with their families, and I also deal with other financial professionals, realtors, CPAs, estate attorneys. So when you're looking at another bucket in retirement, most people need extra cash flow in retirement. You have a home that is non liquid. It's also your home. The number one misconception is that the reverse mortgage takes your home from you. It's just a mortgage like any other mortgage, it's a lien against the property. So title remains in your name and you get to look at a percentage use of your home. Now, equity position, if you owe 80 or 90%, I probably can't help because currently, with the market conditions, with rates up a little bit, the program isn't giving as much as it used to. But I used to say age minus 20 would give you an idea of how much percentage you could have. But right now, it's more like age minus 30 to 34%. The younger you are, it would be closer to 34 minus your age. And the higher you are, I have an 80-year-old, 87-year-old couple right now, and they're getting 56%. So out of those funds, we must pay off any open liens, which creates cash flow. And if you don't have a mortgage, but you could use additional cash flow, it creates a new line of credit. And it is a mortgage, so there are rules to follow. There's some financial aspects where you have to look at a little bit of income. We do a 2-year look back on credit, but it's not hard to get into one. The question is it the right mortgage program to take you where you need to go for the rest of your life? Most of my clients want to go out feet first. You probably don't hear that, but that's what I hear a lot.
No, I absolutely do. Like, a lot of people want to stay. But so speaking of the feet first, basically meaning people in their forever home, how could someone use that to get themselves into their forever home? Maybe they're in a really nice house, but they need to downsize and they want to, I don't know, move to the beach, right? How
Yeah.
could they use your products to get them to where they want to be?
Well, in 2009, the FHA introduced what they call HECM for purchase or reverse for purchase. It takes the same concept where there is a down payment required, and it usually comes from the departure home. So they're selling a home and they're going to walk away with some cash. Sound familiar?
Right.
And they would like to get a new home, but maybe they don't want to have a house payment. One of the things with a reverse mortgage is the mortgage loan payments, not the taxes and insurance or community fees. They're totally optional. That's because it's covered by FHA insurance that guarantees that you'll never have a debt to pass on to your heirs or yourself at the end. So if you wanted to buy a home, we take the same concept. We look at your age, we look at what you want to buy, and it comes up that we bring a certain down payment. Anywhere from 50 to 65% is what you need to bring, and the program brings the rest as the down payment, sort of like a cash transaction, but you're not putting 100% of your funds into your home, which is great because what do we need in retirement? Cash flow. So if you're selling a bigger home and you want to right size, as we call it, instead of downsize, and you want to get that perfect retirement home, That's how people look at the use of this program. And we currently go up to $1,089,300 value home. That's what the formula is based off. And getting into the loan, there's probably less than $600 in costs associated between an appraisal fee and a counseling fee that's required. And then the rest are designed to be financed into the loan.
Nice. Nice. Okay. So you guys, first of all, thank you, Patty. You wrapped that up beautifully. I feel like it was such a great condensed version of the product, but it was thorough at the same time. So
Right.
uh,
20
thank you.
years.
Right. That's what comes with years of having to explain it, I guess. So thank you so much, Patty, for taking the time out. Again, I really appreciate it. Thank you guys for tuning in. If you want more information on this product and you feel like it's something that you could use to get you into your forever home, then I am going to have Patty's information here on the end. And feel free to reach out to her or me. And so we can get you into the house that you want to live in forever. All right, guys. Thank you so much for joining. Have a good day.
Have a great afternoon. Thanks.